Tom's Tools has been around for what, 30 years almost. And it's very robust. It's been constantly developed over this period of time. And there's some really cool tools that, quite frankly, I forgot about. This is one of them. Finding high probability directional candidates with Tom's new high, low stock ranker. So here's a context to help you understand what this scanner does. You've heard of the Newton law, Newton's first law. An object in motion tends to stay in motion. Momentum. Another way to say it in the trading world is the trend is your friend. So, energy comes in, it propels the stock to a new high or a new low. There's a lot of momentum there. There's typically news there that will have the stock continue within a pretty high probability fashion continuing in the same direction. Now, when I first started trading in 1998, that's when I quit my job and started trading. I was trading before that, but I quit my job in 98. And then I studied this guy named William O'Neill from Investor Business Daily. And he routinely bought stocks that were reaching new highs. My first thought was, well, man, why would I want to do that? It's at a new high. That's not buying at a bargain. That's buying at the most expensive the stock has been. But this rule, this trend is your friend, an object in motion tends to stay in motion, tends to propel those stocks to higher highs. Here's an example of one that came right out of the scanner on this weekend when I ran the scan. This is Futu Holdings. It's a sports streaming provider. And look what the stock's doing. It just set an annual high. I think that might be even all-time. Let's just see. I'm going to go to a live chart here on Futu. This might be an all-time high. Let me just check a max chart here. No, it's not an all-time high, but the last time it was this high was way back in October 21. So it's definitely a 2-year high. Let's go back to a daily chart. What I do like about this one is that the volume was elevated here. Big volume. You can see it right here in the chart I don't have volume on this chart, but we're going to run this scan and you'll see this one in just a minute. So that's good. So this stock has momentum. There's power that's pushing this stock up. And so where's it going to go next? Well, it could go up, down, or sideways, but the momentum of this very bullish trend and this massive run up here would tell us that, well, maybe the stock's going to keep going. And even if it doesn't, I can come in here and say, well, I don't think it's going to drop below 60. And I can do other types of trades like a credit spread underneath. So that's the kind of stuff we can pull right out of the scanner. Momentum. An object in motion tends to stay in motion. Here's another one that came right out of the scanner this weekend. And this is the same thing. This is an annual high. It's over a year. It's at least a year high. I think it's over a year. And what I like about these kind of stocks is when you get the momentum, the all-time high or the annual high, and resistance is broken, to me, that's a bonus, because I can use this resistance level to manage my trade. I could sell a put spread underneath here. I could buy a call and capture any momentum, continue to momentum to the upside. And I can also use this resistance level as a stop loss. If the stock closes less than resistance, I close out my trade for a small loss. So I'm going to come back to this slide in a minute. Let's go into the software. Let me show you this cool scanner. So I've got our date set for 12/2. That's Friday. And I'm going to go into stock analysis, and high low right on the top here. All right. Now I'm going to go after all optionable stocks and indices. So what this ranker does, and if you need help on any of the rankers, there's always a help button. And so you can come in here and dig in and learn about the scanner if you feel like you need it. This is a simple one. Don't really need the help on this one. And it gives you two things, two wizard settings: stocks with the latest highest close for the weeks chosen, and stocks with the lowest close. I like both. In fact, if I'm trading credit spreads, I like this one the best. Bad news: stocks setting an annual low are great stocks for selling credit spreads or even other strategies. So I'm going to run the scanner, hit the search button. And when I saw the number of trades or stocks setting annual highs, look at these. All of this, let me just go through the columns. Got the stock, stock symbol, the chart. You can pull up a pick. That's the pick I just showed you. You can go into the news, the high, price, low, and the current closing price. You can see the current closing price over the last year is the highest it's been. So all of these here that have 100% are stocks that have set an annual high. Look how many there are. 87. I'm surprised. I was quite surprised, although the markets have been fairly bullish. But 87 stocks have set all-time highs, and there's a few others that have come very close. So these are great candidates for all sorts of trades, and we're going to go through those in a minute. Now, stocks with the latest lowest close for the weeks chosen are the train wrecks, the stocks that are hitting bottom, that are setting lower lows over the year. I love these for credit spreads, especially if they're combined with bad news, designer brands. Let's take a look at that pick real quick. Yeah, there you go. Credit spread, screaming credit spread. The IV on this will be high. Obviously, earnings came out, the stock tanked. That's a lower low. So man, that's my favorite sniper credit spread. And so when you do that, if you like that kind of a trade, you could pull up a stock chart. You could check out the volume underneath here. Look at this volume, massive volume, massive volume. I can also overlay IV if I want to see the IV on this thing. I imagine it's quite high. It is. It was higher before earnings, but it's still high 2 days after the earnings announcement. The IV has been as low as here. So these are expensive options and a really good candidate for a credit spread. All right. So these are, we could certainly take this list and run it through any number of scanners. So let's talk a little bit about the different types of scanners that Tom's Tools has. And there's more than these, but basic trading would be to buy a call or a put. If you're bullish, you buy a call. If you're bearish, you buy a put. We have a call and put scanner that help you find the calls that will double your money, or puts that will double your money with the smallest move in the underlying stock. We also have a debit spread ranker called vertical spreads. We have a credit spreads ranker where we're selling put or call credit spreads, and then advanced butterflies, broken wing butterflies, calendars, condors. All of those things are valid strategies as well. So let's just play around a little bit. I'm going to go ahead and rerun the scanner for bulls, all optional stocks and indices. Then we're going to take a couple of trades here in a minute. I've got a few I have my eye on. So what I'm going to do here is these 38 stocks, I think it was. No, more than that. My God, there's 87 that are all at annual highs. I'm just going to take those 87. So for sure, these have closed at an all-time high or an annual high. So I'll take the 87 stocks and I'm going to copy them into this holding list called my stock list. Click replace. And now I can go into searchers, single strategy, and then go after various types of strategies. So the simplest thing you could do here is go calls and puts. All right, I'm going to turn off the settings to make it a little easier to understand. And what I want to do is run my stock list through calls and puts finder. And I want to sort this by the lowest probability to double with the calls. So what does that mean? That means give me the option where the stock, the trade, the call in this case will double with the smallest move up in the stock. Hit search. And look here on the top of the list. Bristol Myers. Let's take a look at his pick. There you go. Bristol Myers is now above 81. It closed above 81. I'll see what it's doing here in a minute live. This call option, which expires January the 20th. Typically, we're going to buy 60 to 90-day options when we buy calls. Doubles at 3.81%. That means that if the stock rises 3.81%, you double your money. The stock moves 3.81% and your position doubles. That's cool. That's the power of options. So you also want to check the news, see what's up with Bristol Myers. You can click the news here and it pops you right into Yahoo Finance. You can check the news there. I'm going to do a live look and see what Bristol Myers is doing as I speak. Is it something I want to do? Yeah, look, now we just set another all-time high, or I keep saying all-time high, annual high on Bristol Myers. Well, what's going on with Bristol Myers? It's having it rise. And you can dig through the news. This is a Thinkorswim news chart. You can dig through the news here. You can go through brokers news, like I'm doing here with Thinkorswim simulated, and check the news. But that's a very nice candidate. Now, are there better ones? Maybe. You can go through the list here and then check. Here's Getty Realty, also doing the same thing. So all of these are good. Let's just take this first one here. I'm going to grab, it has the smallest percent to double on board. I'll grab Bristol Myers. And from here, I've got a nice little call option that has 49 days of time in it. The basic rules on these are hold it to 30 days to expiration, take it off for a double, or take it off for a 50% loss. That's the basics. All right. So in this case, if I wanted to risk 500 bucks, I would do 8 contracts. And there's my 8 trades, $488 of max risk. And then I would go into my broker's account. I would buy the call option. If I double my money, which means the option is worth $1.22, I would exit. Or if the position dropped in value to 30 cents for a 50% loss, I would exit. Or if it's 30 days to expiration. So that's the basic way to handle these things. Now there's other ways. I can go into the credit spread world, which well, actually, before I do that, let me go into vertical. So there's a vertical spread ranker as well. Now this one's got a little bit of directional slant to it. All right, so these are call vertical spreads. The debit spreads, we're buying the spreads. What it also does here, everybody, is that it does a 10-16 bullish moving average cross. So it's only going to give you trades in which the stock has recently, in the last 3 days, had the 10-day moving average cross above the 16-day moving average, which is cool. It's another directional trigger. So what I'm going to do now is take that same list of stocks, my stock list, and I'm going to hit search. And then look at this. Bristol Myers comes right up on the screen, everybody. Look at this. I'm going to go ahead and pull up pick one. And this is what it's looking for. Here's the 10 and the 16-day moving average. So the purple line is the 10, and it's just crossed above the 16-day moving average. Short-term moving average crosses above longer-term moving average. And you can kind of get a feel here for how that works. Here it worked really well. There was a 10 crossing above, oh, wrong place. Yeah, here's where I'm looking for. So the 10-day average crossed above the 16, and after that, the stock ran up hard. We got another one here, and the stock has already set another high, another annual high. So for me, this is a good looking directional trade. Lockheed Martin, same thing. Look at Lockheed Martin. Goodness gracious. 10-day crosses above the 16 annual high. Let's go to LMT. It's down a bit today. That's okay. If it, I would on this one, I would wait for the stock to get above 500, and then I would potentially grab this one. So that's a call spread. Now, what do they look like? Well, you're buying a long call and selling a higher strike call. So that's what this looks like. I can zoom in from 70 to, let's say, 70 to 90 using the stock tools. And then I'll hit risk graph, and you can see a bit better what this spread looks like. So again, this one makes money if the stock rises. All right, we bought the 81 call, sold the 83. The net debit of that transaction is 90 cents. Now, would I do a call option, call spread on this stock if the IV was low? Probably not. I would just buy the call. I wouldn't do a call spread in this case.